We're looking at company charts and graphs that appear in the newspaper and also in other publications on the web that let you know information about the companies that you're investing in. Once again, the more information you have, the better your trading decisions are going to be. There's a lot of different varieties of graphs, and we're just going to have a look at a couple of them. The first one is the candlestick graph. This one looks a little bit confusing, but it actually is quite a groovy little graph because it shows a lot of information in a really tiny little area. It's either a green or a red body of this candlestick chart. It's called a candlestick chart because obviously you've got at the top here, you've got like a wick, and the rest of it actually looks like a bit of a candle. So that's why it's called a candlestick chart, believe it or not. So let's have a look. If it's green, it means the price is going up. Okay, green means it's going up. The top of the green candle there is the highest price for the day, and the bottom is the lowest. Then the bottom of the box, it's like a box and whisker plot, is the opening price. So notice that the opening price is below the highest price, which is obvious because it's going up. The top of the box is the closing price. So the bigger that box or that body, the bigger the shares have moved that day. Okay, so it starts, the bottom of the box is the opening price, then it's the closing price. Now, of course, the reverse happens when it's going down, when the price is dropping. It's a red body, and you can have a look. Once again, the opening price is at the top, so it's reversed over from the other one, and the closing price is at the bottom. So the tops and bottoms of those boxes are changed over. The highest price is still up here and the lowest price is down there. So what's happening is it's showing you that the prices are dropping, and the opening price is at the top of the box and the closing price is at the bottom. So if there's a whole lot of red candles on your graph, it means that your shares are dropping. If there's a whole lot of green candles, it means the price is going up. The bigger the body of the candle, either the further it's moved up or the further it's moved down. So that's one graph. It's called a candlestick graph. It tells you a lot of information in a very quick snapshot. When you look at it as a real live graph, this is a Billabong, we can see that they've been going up and down, but generally their prices are going down more than they're going up, which is probably not a really good thing for an investor. You can see that this day here is quite a bad day because the opening price is up here and it's dropped down to here, and the lowest price it's ever traded is down there. So it's moved from about 66.5 cents down to about 64 cents in a day. So it's dropped about 2 cents. So that's quite a big move. The other one is this one here. So you can see overall this share price is going down, and you can kind of, if you wanted to draw a line in there of what's actually going on of the share price, if you wanted a line graph, it'd be going like this. So the price is actually going down, so it's actually not the best thing to do. If you really wanted to, you could join up all the opening prices and put a dot there and join the line together, and that would give you exactly what's happening during the day. Down the bottom here, you'll see there are volumes. This is volumes of shares that have been traded, and these are, if you have a look here, this is a million. So this day here, where they had quite a big fall, there are a lot of trades being done, about 1.5 million shares are being traded that day. And once again, it's dropping here, and there's a lot of shares being traded. Here again, the price has gone up. See, the price has gone up here. The day before it's gone up, and then it started dropping again. So more people are selling the shares or trading the shares. So a trade just shows a buy or a sell. So that is a candlestick graph, and you can be able to see the information off of it. Another graph that's really useful is what we call a moving average graph. On this graph here, the red graph on this one here shows us our daily prices of Billabong. So they're going up and down. You can see them moving up and then down like this. And you can see it's quite volatile. It's moving all over the place. Okay, and if you remember back to our candlestick graph, it was also going all over the place. But you can see that this thing is going zipping down, up and down, drop, 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 drop. So it's very hard to make a trading decision. How do you know when to buy and sell? How do you know what's happening on average? That's where the green line, which is the moving average line, really helps out. The moving average line, what it does is it takes the average price of the shares over a number of days and just averages them out. So this is a 10-day moving average. So it adds up the prices over 10 days, finds the average. Then it moves down one more day and finds the average of the next 10 days. And then another day and the next 10 days. So as it moves along, it's finding the average price over a period of 10 days. So it's slightly lagging in terms of what it shows you on the market, but it does smooth off all the ups and downs and the blips. So you can have here, see here, we are now looking at the green line. The green line is our moving average line in here. And so you can see how it comes along here and it's smoothing off the peaks and troughs of those shares, which is pretty cool, because what that means is that you can use that to make trading decisions. The bigger the moving average, like a 10-day, 15-day, 20-day, 30-day, whatever, the bigger the moving average, the more gentler that line is going to be. Now, if we were going to use this as an indicator of when to buy and sell shares, how do we do it? Well, basically, when the red line or the daily price goes above the moving average line, that is a good indicator to buy. So let's have a look here. Here's one just here. So you can see the red line here is the daily share price. It moves above the average price, so that's a good indicator to buy. So when it moves above the average line, good time to buy, because remember the average line is showing the average price over 10 days. So what that's saying is this share price now is better than the average price over the last 10 days. Then a selling option obviously is the other way around. So when the price is dropping and goes below the moving average line, it's a good time to sell. So once again, it's now dropping, so it's dropping below the share price that has been averaged out over 10 days. So it's saying it is dropping below the average price for the last 10 days. So it gives you an indication that maybe it is plummeting a bit much and you should try to get rid of it. Of course, you should also calculate your break-even point on your price, because that gives you another scope to actually work out what's going on. But the moving average is a really easy and a good way of telling you when to buy and sell. Now, our last one, what happens if we're going to look at the moving average line on a candlestick graph? So if you have a look up here, the candlestick graph is moving and dropping down against the moving average. So that green line is the moving average line, and this is the candlestick graph. So you can see this day here is quite a significant drop. Notice here, it's just there as well. So those two things, this one, are the same area. So it actually says that if your candle is very big and red, it means it's dropping a lot and the share price is going down. And once again, let's have a look again. Let's grab this one here. This one here is on the AND day, and you guessed it, you come across down to here, and there's your big plummeting price there. So it's a really good indicator of what's going on in the market. And when you combine the two graphs together, with a line graph and your candlestick graph, it's very clear, showing you what's going on.